Welcome back, everyone. Next, we have Electronic Servitor Publication Network trading on the OTCQB under the symbol XESP. It's a digital engagement company providing growth for B2B companies through its digital activation and customer engagement solutions for multiple verticals. XESP's managed service offering is powered by a sophisticated tech stack, the Digital Engagement Engine. XESP's technology provides intelligent interaction management, dynamic content provisioning, and logic-driven workflow, which creates dynamic digital experiences that accelerate an audience from awareness to action, driving growth for client companies. Peter Hager is a seasoned business executive with decades of leadership and cross-industry experience within executive management, operations, sales, marketing, and technology. Peter has driven results across multiple verticals, working with innovative and market-leading organizations, including Johnson & Johnson, Medtronic, United Health Group, Wells Fargo, and many more. Prior to leading XESP, as its president and CEO, Peter was ahead of the C-suite for 9 companies over the past 25 years, beginning your career at Land O'Lakes in the consumer packaged goods and food service industries. Holds a Bachelor of Arts degree from Macalester College and concentrates in economics and psychology. Welcome, Peter. Nice to see you, president and CEO.
Glad you're here. Thank you, Anna, for having us. I'm delighted to be here. Thank you.
Okay, well, the floor is yours, and you call me back when you're ready for questions.
Very good. Again, thank you. Just a little bit of housekeeping here. Obviously, most of you are sophisticated investors, and you understand forward-looking statements. But for those that are new to investing or new to this, we do have a forward-looking statement. We're going to be talking about past, present, as well as future items that we're going to be working on. We are a public company. We disclose everything through the SEC, and we're compliant, but we're a risk like all other investments, and we ask that you do your due diligence. Today, we're going to be spending about 25 minutes going through who XESP is, where we're going, and why that's important. And in the end, we're going to be answering questions. Along the way, if you have questions, please email those to Anna and the team, and we'll take it from there, and we'll get in the end. So looking forward to today. I also understand we're having a little bit of a bandwidth issue, so we're going to go to the deck here. I'm going to take my video down, and you'll be able to see what's going on. So for those today, I want to really just start off with why it's important to be listening to our organization, and more importantly, why this space. So let's just foreshadow what we're going to talk about. Digital services are certainly on trend and very relevant to investors and customers alike. Our company is a growth company, and we are positioned for growth today. You're going to hear terms around artificial intelligence, not aspirational, but how we're executing on that today, how we're using machine learning, deep math to connect brands and people in much more meaningful ways. And ultimately, we've built a business model over the last 18 months that's meant to be completely disruptive and change the way that people engage the market today. So let's talk about first the importance of digital transformation and just set context. And I want to do it from the standpoint of a CEO or what the marketplace is looking at. So there isn't a CEO out there today that doesn't understand what's happening in digitization. Most of the time that we're interacting with our customers, our clients, or our audience, it's in a non-face-to-face way, right? It's digitally. The second thing is, to be a CEO today and in the C-suite is extremely demanding. Let's just talk about volatility. Whether it's the Great Resignation, it's the financial market crisis, it's geopolitical instability. We have a lot of things going on right now. But what's important to know is that you as investors, you don't care, nor do shareholders. You demand that the C-suite delivers. So the C-suite is looking for assistance on making sure that they can deliver on their promises and their growth. And you can just look to some legacy brands like 130-year-old Coca-Cola and how they're using digital transformation, to certainly those that are relatively new, Amazon and Tesla, 30, 20 years old, but they're built around transformation, right? The market needs to transform extremely fast. If you don't, you'll be left in the rearview mirror, right? You have up-and-coming businesses completely dismantling legacy businesses because they're able to transform quicker. Why is that important for you today as it relates to XESP? We're at the intersection between digital transformation and customer engagement. And if you look at that a little bit deeper, customer engagement is the front lines. It's your marketing, it's your sales, it's your customer service, even your technical service, and how you're interacting and growing your business. And we're very comfortable there, and we've been in that business for quite some time. When we look at the actual market opportunity, you have to look at the promises that were made decades ago that we were all going to be connected. And if you think about the Internet of Things and devices, as we sit here today, approximately 16 billion connected devices today. But look at what's going to happen, estimated, over just the next 3-4 years. Almost doubling, going to 30 billion devices that you have the ability to interact with, and they're going to make our lives easier. If we take digital transformation just a layer down, there are a number of ways to size the market. But if we talk about the front lines of being marketing and sales, the value of the marketing technology market alone is 330 billion, growing to almost 5 times that within the next 10 years to 1.7 trillion. So the marketplace also knows digital transformation is going to have a profound effect on business. Now, all the software and all the tools and all the applications that we use today are all changing, and they need to rapidly change and modernize to be able to handle data more efficiently, to be able to connect better in real time, and to be able to advance with what is being applied today. So let's talk about the elephant in the room, artificial intelligence. And artificial intelligence isn't just a domain that we're talking about any longer. It was introduced this time around in a way that didn't scare people, right? You were given AI and said, hey, play around with it, see if it can write something better for you, or see if it can make your life a little easier by inferring what you were looking for and handling that job for you. We use AI today in our own technology, but we've been using AI and ML for quite some time. But for everybody in the investment community, AI presents the greatest change in business and in our lives that we've ever seen, right? No mystery there. So why XESP? Let's talk a little bit about really kind of this classic why us, why now. We're a company focused on growth of our customers, and everything we do is from that lens. We start with the end in mind. We don't try and build you something and hope that you get there. We start with what your growth goals are, and we work backwards from there and use a sophisticated technology in order to get you there. Now, should the C-suite expect more from all of their vendors and all their technology? The answer is yes. So we're also, in our business model, pushing forward really a movement that it's the end of tools and technology. Nobody wants to buy a tool anymore. Nobody wants to buy technology per se. They want the tools and the technology to do something for them, right? And as we look at it, we're producing that end result growth from a service. So the service has to be very valuable to you, right? It has to be easy to integrate into your large ecosystem, and it has to produce the results. And more importantly, the CEOs that we're engaging with are all making sure that what we're doing is de-risked because they don't want to add more risk into their business. And they're also pushing for another change in the model, which is shared risk. Are we willing to be paid on if we produce the results rather than paying on seats and licenses? And the answer is yes. So we've taken a tremendous amount of time in listening to the voice of customer to really figure out what problems we needed to solve, right? And then where we were going to take the market. So when you think about our past, our formalization stage, voice of customer for us is what problem is really there today? How are you trying to solve that problem? And can we build something that's better, more efficient, and more effective? And the answer is yes. So we've taken about the past 18 months, we've integrated a tremendous amount of intellectual property. We've built our technology and our services team around connecting that B2B company with their marketplace. Today, we're in our stabilization stage. And what that means is we're applying and executing with that technology and that service. We're onboarding clients, we're onboarding channel partners, and we're doing it in multiple verticals where we know that growth is going to be on trend and one of their greatest pushes. So we're calling this growth as a service. And the reason why we're calling it a modern business model is we have an effective and efficient way of getting you there from an experienced team. We have all this technology, but that's what you're buying is the end result. So Our technology stack is called the Digital Engagement Engine. And we're going to go into that in a little bit as far as what it does. But you don't buy the Digital Engagement Engine. We use that through our service providers and provide that growth for you. The reason why that's important is we're not pushing another tool or another application your way. We're bringing our tool set to bear to connect you to that marketplace, integrate it back within your tools and technology and system, and give you growth. Our results are produced at a lower cost, almost 50% lower than customers can do themselves. And we provide it as a managed service, which basically means you don't need to bring your team forward. We bring our team, we bring our technology, and we deliver it for you. So again, as we talked about de-risking this for CEOs and making their lives easier, you're not looking to expand your staff. You're looking to right-size your staff and make them more efficient. That scale is coming from people that our customers trust. Not only can we go direct to a customer, but if they have a preferred channel partner, whether it's an investment bank, a VC, or even a service provider, we're going to work through those channel partners to deliver this service for you. So again, a much more modern approach. Let's talk about, how people make money. First, I think if we're going to talk about this movement and the shift to results, we have to say, look, we can't have long-term contracts. We don't want to have an annuity. We want people to be able to easily integrate and get this into their system. So from a customer standpoint, you sign up, it's a quarterly fee, right? You sign up quarter by quarter. And if we are successful and we produce that growth, you pay a success fee. It's very, very simple. So it's low entry, low barrier to entry in terms of costs, and it's all upside. For the channel partners, they make money because not only do they get increased services, right? They're that trusted source, but to be able to bring artificial intelligence that works, to be able to bring better execution and connecting the B2B organizations with their customers means they also receive more money. Also, we share our success fee with them. And finally, as a growth company, we know that our money comes from being faster, better than companies can do themselves, and continuing to provide that growth for them. So again, all three, the customers, channel partners, as well as us as an organization, we all benefit from us being able to succeed and implement our technology and our service. So if we're talking about this technology, let's talk about really three components that everyone needs to understand. Really, if you're not face-to-face, you need to be able to connect with an external audience. You need to be able to relate with that audience and the community surrounding them. And you need to be able to engage with them in very, very meaningful ways, right? You're going to have to do that in a smarter way than we've done in the past. You're going to have to do that in a more meaningful way than we've done in the past. And you're going to need to get smarter along the way. The best way of applying how this technology's intellectual property works is to give you a practical example. So you already have dashboards and tools today that talk about clicks and reach and lift, right? I want to talk about something where we took a brand that was unknown and we went into a highly regulated market. It happened to be dentistry. And we told doctors that what they were using was not the best technology. And we had to do this in a way that made them believe, comprehend, try the product, and then self-advocate to basically eliminate a 200-year predicate. The 200-year predicate was metal, and the newcomer was advanced polymer. Polymer that was stronger than metal, but it was also flexible enough not to ruin your mouth and your teeth. Seems simple enough. We launched this into 3 different markets. So we had a geographic spread in the UK and Germany and the US. What's important there, starting with the end in mind, to take a new brand and a new product that nobody knew they needed to try and convert this to become the standard of care. Our goal was to get these professionals to watch a video that would educate them on why this was important. So the most important thing for us was taking 46,000 professionals, having them watch a video all the way through to completion to get to activation 160,000 times, and we did that in 6 weeks. So as a practical example, digital engagement had to do that. Let's break down 3 simple things that were happening there. We had a number of contacts that were out there, doctors and healthcare professionals. We had content that we needed to get to them, a video, and ultimately we had to interact wherever they were, whatever the privacy policies were by country, all in a compliant way on any device. Now, this is digital engagement of yesterday. This is really a data management play, and everyone needs to be able to do these three things very, very well. If you think about one of the first connected devices or Internet of Things, you go almost old school here rather than Venmo, go back to an ATM, right? It took out the tellers and the banks. You put your card in, you identify who you are, and the ATM gives you cash. What's interesting today is the machine called an ATM isn't smart enough to realize after the first couple of times and you put your PIN in, why are they asking you what language you want? Why are they asking you what next transaction you want? It should be sensing and responding and getting smarter and knowing you. After all, it is your financial services institution that should know more about you. So that's where we get to the transition that is digital engagement today. So I really want to break it down as simple as we can. There are two things at play. You have the digital experience, how you're connecting, and then you have the customer experience, what you're interacting with. So we call that engagement and activation. Now, if I take it from a simple standpoint, there aren't contacts on the other side. There are actual people, right? And so what we build in our tech stack are very sophisticated workflows. Workflows are business rules and logic that allow us to transition that person from awareness to advocacy in a meaningful way. Whether we need to apply personality science or sales methodologies, we can do that at scale. Secondarily, it's not content, it's messaging, and you're having a conversation. So who are you talking with, but what are you saying with them? We look at this at the genomic level, right? What messages, what styles are working in real time and adapting in real time for that user. And finally, in the application or the activation side, it's no longer about an interaction. It's what's the intention and are you relevant? The digital engagement engine quantifies this and it produces what we call the next best interaction. Always getting smarter, always producing a better experience. And these are the three components today that we need to do through any channel and any device. And that's what the digital engagement does. So the drivers behind it, as I'm saying, are workflows. And workflows, really just think about them very simply as those are intelligent pathways, right? Or data management between two things. I really want to focus on microservices. And even though we leverage our own technology, the customers don't buy the technology per se, we built it on a very modern architecture called microservices. Simply put, for those that are unfamiliar, every part of your application is coded into a little service. So a login is a service, a payment is a service, provisioning content is a service. So in the future, as we need to maybe update or upgrade the code to one of those services, you only have to program that code. It connects to the other microservices and it minimizes what we call technology debt. It's the reason why tools and technology providers today are all rewriting their code to minimize their technology debt, because we have to sense and respond faster. And if we have to code and it takes too long, you're never going to be able to keep up. And finally, we leverage artificial intelligence, both artificial general intelligence as well as artificial specific intelligence. We're connecting into the 4 largest LLMs out there to be able to produce content, to be able to get rid of those repetitive tasks that are unnecessary for your team. And it allows us to sense and respond better, because what we do at the end of the day when we make that connection, we then hand it back to your team so they can be more efficient with your customers. So again, we're not displacing your team. We're not displacing your technology. It's almost an Intel inside model. We're making everything better. Finally, what are we doing as a company and how are we going to keep others in the rearview mirror? We have to continue to grow our channel partners and grow their service offerings. We have to be able to onboard customers in a very painless, efficient way. And the way that we look at this is we can onboard customers in a matter of minutes and hours, maybe up to days, rather than weeks, months, or years. Simply put, most of the time it takes a customer longer to even schedule a meeting with the team than it does for us to be able to actually onboard them as a customer. So as we continue to expand our channel partner base, that's going to be important because it also diversifies us as an organization into multiple verticals. And those channel partners are the trusted source between us and the brands that they represent, right? So why not leverage that? And it also gives us scale, not having to have hundreds of consultants in every one of these verticals. And finally, we'll continue to, I want you to focus on the word meaningful, create meaningful IP and assets. We're not creating technology for technology's sake. How are we forward integrating our technology in a smart way to do what we say, which is produce growth? And so those are the assets that we'll continue to build and continue to look at. If we break it down into just us as an organization, and we look at business milestones and financial milestones and metrics, I want you to focus on a few things, right? So first, from Q4 of 21 through Q2 of 2023, we listened to that voice of customer, we built the technology, but we're executing on it. And our business is about execution, not talking about just what the future might be, but being able to practically apply it today. So I said we're delighted to have had our first customer come on board in the end of Q2, beginning of Q3 of this year. We also look to onboard our first 5 clients within this calendar year, maybe into a little bit of Q1. More importantly, we're going to continue to accelerate those clients across multiple verticals, which I'll get into in our milestones. We also continue to expand our team, both as channel partners, but also consultants, advisors, and employees. And as you can look at public information that we disclose, one of the most recent ads is we're delighted to have Eric Swan on board. Eric spent 3 decades, 30 years in the investment banking services, specifically in the medtech area, and brings a wealth of knowledge on how to apply capital to disruptive technologies in that market. And as a member of our team, can help us with voice of customer, applying our growth model to helping the healthcare market. We're delighted to bring Eric on, but others like Eric in each one of the verticals. So again, we're listening to the marketplace. We want to remain smart. We're also going to grow our assets. Recent public disclosure, we're finalizing 2 acquisitions, one on PhyTech and one in Pointword. Simply put, those are both in customer activation and engagement technologies. And as we continue to bring those on board, it'll make us faster and more efficient. From a financial metric standpoint, what we'll hold ourselves accountable to and what we want our shareholders to hold us accountable to, as we onboard clients, it's about $650,000 to $1 million per client of revenue per year, and the expected margin is greater than 50%. Now, our goal is first to grow organically at 5 clients per quarter, but we're actually set and capable of handling 20 clients per quarter across multiple verticals. When we do that, we know that we're going to be in our vertical growth mode rather than just our foundational mode, and vertical growth will mean a great return for our employees, a great return for our shareholders. So if we want to really think about XESP and 5 things that all of us should be remembering from today, it's this. We're a growth company leveraging technology today. Digital transformation is everywhere. XESP is at the intersection of digital transformation and customer engagement, driving growth. Everybody is talking about AI, our artificial intelligence, powering that technology today is driving growth, along with machine learning, along with algorithms, along with applied sciences today, and getting smarter. We run this technology as a managed service business model to easily engage us. You don't need a team of technologists and business consultants in order to do this. And so we've lowered that risk of getting in, producing growth for our clients without having to make a difficult decision. And finally, we will continue to diversify, onboarding our customers, onboarding channel partners across multiple verticals as we continue to go forward. And we're well positioned to do that. And Anna, at this point, I'd like to turn it back to you and answer some questions as they may have come across.
Great. Thank you, Peter. We do have some questions for you. Okay, let's start specifically why you believe the market will shift from purchasing tools and technology to results.
You know, that's a good question. I don't think it's even just personally XESP. I think there's a logical and emotional answer that all of us as investors and as business folks should be looking at. And that, isn't it just a smarter way, right? Why are we continuing to buy apps and licenses that aren't necessarily producing the results that we were looking for? So from an emotional standpoint, we just believe it's smarter. But logically, shareholders are holding the executives accountable. We can't have expensive integrations. We can't be offline. We can't have tools that don't work for us. So people are going to really push for that. And so that's why growth as a service, we believe, is really more of a movement. Also, risk mitigation is going to come in the form of speed. And if you think about speed of delivery and able to drive this growth, it pays for itself, right? So the internal teams are already busy if you have enough internal resources. And our ethos is let's just make it easier for everybody to integrate and to grow. So we believe that the shift will be dramatic. We believe that it's coming fast, and we will help champion and lead that change.
Also, can you talk a little bit about why this digital transformation is so important for the investment community to fully understand?
I think you first have to look at what the large brands are doing and use them almost as a bellwether. One of the fastest growing brands, and if you haven't heard Bill McDermott from ServiceNow talk about digital transformation, we'd recommend that everybody does that. But ultimately, go back to that statistic that basically says there are going to be 30 billion devices that are connecting us all. So digital transformation is about connecting those devices and us. And those that are not connected will become dinosaurs, right? We'll be left behind. So I think AI has done a wonderful job as to getting some visibility on why we need to transform, and it's helping us grow. But ultimately, we're going to need to be on 24/7, creating meaningful relationships in this digital ecosystem, or we won't, as a brand, be around any longer, right? So we believe it's extremely important, probably the most important thing that businesses can be looking at. I also would say that digital transformation is now also becoming almost business transformation, where digital is becoming your business.
We'll talk specifically about why your tech stack is smart.
That's a good question. So smart in a standpoint that what we push for is growth, but let's talk about those three components that we talked about in the data management layer, right? The people, the messaging, and then the intention. When we look at a next best interaction, the reason why we're saying our technology is smart, if your technology can't sense and respond and get better, then you're going to be a dinosaur, right? So if I bring you back to that ATM, the fifth time you've put in your PIN number, if it's asking what language you want, that's not a very smart system. If it's not saying you're located in this city and this is probably your most logical transaction, it's not a smart system. Now, that may sound interesting or even laughable to some people, but let's talk about our websites today. How many websites do you go to today that even if you allow them a cookie, does it get smarter and adapt to what you want in real time? That's coming very, very quickly. Privacy is as paramount. You can't drop cookies. You shouldn't be pixelating in order to track people. Your servers and your data should be able to be smart enough to sense and respond. And that's what XESP is doing for customers. Be able to digitally reform and transform your messaging from the customer's point of view, making you relevant.
So talk a little bit about how you integrate B2B companies using your service.
So we went and we're focusing in on that B2B market because, number one, we know the pain points of that market very, very well, right? The pressure on that market to produce, it's tremendous. And again, as we look at those companies and the ease of integration for us, we're able to now do that in hours, right? In days. What used to take months and years, we can do now. So again, we can get them up and running very quickly. I think what's really important as well, our model is based on value, right? We're priced on value. And right now, there's approximately 20% of B2B spend is on sales and marketing. And if we can produce growth for even half of that, that's more money to the bottom line, and it's also more growth for our customers. So we're producing results, we're lowering their risk almost 50%, and it's a very compelling reason for B2B customers to be looking towards us.
And Peter, you recently disclosed some M&A activity. So how important is that to your success?
I think if we eat our own cooking, we also need to grow, right? We need to grow from a client base, we need to grow from a channel partner base, but we also need to grow our foundation of our technology. So we will always look towards a build versus buy model. And if we can partner or buy technology that's already out there that we can apply in a unique way to drive growth, we're going to do that. If not, if we need to build it, we'll build it ourselves, and we'll look towards those very valuable and experienced consultants and providers out there. So number one, we really have to measure it on, are we growing ourselves? And the reason why we do that, Anna, is very simple. Are we keeping our competitors in the rearview mirror, right? So we have to challenge ourselves to always lead, but lead in a way that de-risks it for our own customers, not put them on the bleeding edge, just put them in a position to win and to grow. So we'll continue to look towards activity and look forward to more disclosures coming out.
I believe we have time for one quick question from Eric Swan. It's about AI. You talked a lot about AI, and Eric wants to know, with AI development moving so quickly, what metrics or criteria should a growing company focus on to properly evaluate service providers and software vendors suitable for their needs?
I think that's a very complex question, and let's first start with, are the vendors able to apply something today, right? If it's seemingly too difficult to get this integration done, something's wrong. And there are plenty of experienced people that are out there today that are applying it. I'll give you a direct example. It wasn't so long ago, let's just say 5 years ago, weren't we all talking about algos? And my algorithm can do this, and my machine learning can do this. Well, for those that are just getting caught up there, you're already in the rearview mirror, right? So you need to look at companies that were on the forefront of this, but they're also leveraging AI in a sound way, in a safe way. And if they can show you that, those are the types of people that'll lead. And again, look towards ServiceNow, look towards some of those big tech companies. For us specifically, we already have it fully integrated into our tech stack. We were from day one. We're going to continue to evolve that going forward. And we're also able to leverage that through our channel partners to make them smart in applying AI to their customers in real time.
Well, Peter, I do believe we are out of time, and I'd love to give you a minute for some closing remarks. This has been a fascinating presentation today.
We appreciate, the entire emerging growth team. Again, we realize that your audience has hundreds and thousands of investment opportunities out there. We'd like everybody to continue to challenge, not just looking at us, but challenge the norm. And that is, let's end this costly spend on tools and technology. Let's get results. Let's move forward in this volatility. And we look forward to leading that. And we look forward to those investors challenging us and looking to us as being a leader.
Perfect. Well, thank you, Peter. We sure hope you come on again in the future.
Thank you so much, Anna. Take care. Have a great conference.
Thank you. Okay, everyone, stay with us. We'll be back with our next presenter.